By 2030, half of all U.S. transactions will bypass banks entirely. Your paycheck, your rent, your morning coffee, all moving on rails that didn't exist just 5 years ago. After analyzing the Genius Act, Federal Reserve data, and the collapse of 15,000 bank branches, I've uncovered the roadmap to your financial future. Congress accidentally signed the death warrant for traditional banking. Accidentally. And you won't even notice until your wallet is empty. Today, we're taking you 5 years into the future to show you the money in your pocket, or what's left of it. And please don't forget to hit the thumbs up and subscribe buttons below if you haven't already. I would really appreciate it. Old Uncle Rod gets pretty hungry, and I need the YouTube checks to keep me in a fresh supply of BOLOGNA. Good old Oscar Mayer. So I need those YouTube checks for my bologna cheese, ketchup, and pickle sandwiches, which if you haven't tried it, don't knock it. Those are delicious. Let's start with where Generation X stands right now. Only 40% of us even know what stablecoin is. And don't feel bad if you're not one of the 40%. I wasn't either until I did the research for this episode. But 40% of us even know what stablecoins are. So compare that to 71% of our kids who are already using them, of course. In other words, we're caught in the middle again. More aware than our boomer parents for sure. They're at 21%. But watching millennials and Gen Z race past us into digital money is a little disheartening sometimes. Right now, stable coins, those digital dollars that 60% of Gen Xers have never heard of, have quietly reached $267 billion in market value. $267 billion. Trillion dollars. That's trillion with a T, I'm sorry. To put that in perspective, that's more transaction volume than Visa, worldwide Visa. But here's what nobody understands. You see, you hear about Bitcoin, too. Bitcoin failed as money. It became digital gold, something people would hoard, and they wouldn't spend it. Nobody's buying coffee with Bitcoin when it might double in value tomorrow, right? But stablecoins, they're digital dollars that move at internet speed without banks. And that changes everything. Nothing will ever be the same again. It's the end of the world as we know it. And I feel fine. Just look at the trajectory. Stablecoin transaction volume is growing at over 100% annually. At this rate, by 2028, they'll process more value than all U.S. bank transfers combined. While Gen X was figuring out how to balance work and life, our kids figured out how to abandon banks entirely. But here's where it gets interesting. While private companies created this parallel financial system, governments tried to compete. How do you think that worked out? Nigeria launched the Inara, I don't know, I butcher those names. And I saw this in 60 Minutes probably a year ago, but it's their central bank digital currency. But what was the result of that? At the time on 60 Minutes, everything was going really well. But now 98% of those wallets sit abandoned, completely empty. Meanwhile, in that same country, stablecoins make up 40% of all crypto transactions. When governments create digital money, it fails. When private companies do it, banks panic. JP Morgan just announced they're charging fees for open banking access. Some reports suggest up to 10 times current rates. They're literally trying to build a toll booth at the last remaining bridge between traditional and digital money. And here's what the mainstream financial press completely missed, and so did I'll admit. Because I said this, Congress didn't regulate stablecoins with the Genius Act, and I said that they did. They legitimized private money creation for the first time in U.S. history. Let me say that again. They legitimized private money creation for the first time in U.S. history. Non-banks can legally issue dollar-equivalent currency. Non-banks can legally issue dollar-equivalent currency, which means I've got some Rod rupees I'll email you for a small fee. And I'm kidding. I'm not serious. Gen X, let's walk through our day in 2030 when we're in our late 50s and early 60s. I will be in my early 60s, depending on what your definition of early is. You wake up, your employer deposited your salary overnight. Not to Wells Fargo or Chase or your local downtown Mayberry neighbor's bank. directly to your digital wallet. It happened at 12:01 a.m. because money never sleeps anymore. Money never sleeps, pal. I just made $800,000 in Hong Kong gold. It's been wired to you. Sorry, that's from the movie Wall Street. You pay your mortgage with a tap on your phone. The bank receives the money in 3 seconds, not 3 days. That evening, you're at the grocery store. They offer you a choice. Pay with your old credit card for $50, or you can pay with stablecoins for $48.50. The merchant saves 3% card processing fee and splits the savings with you. It's going to be like paper or plastic. It's literally the end of banking hours. Money now moves 24/7, 365 globally and instantly. Your millennial manager can pay that contractor in Singapore at 11 p.m. on Saturday. Your Gen Z kid sends money home from their semester working abroad instantly for pennies, if there will be any fee. And you and me, stuck between two worlds. Our 401k is still trapped in traditional finance, while our kids' wealth flows freely in digital channels that we barely understand. You know, Gen X, we've seen this movie before. And it's been on reruns almost as much as Mrs. Doubtfire or The Fugitive. We watched Netflix kill Blockbuster, and I miss going to Blockbuster and getting Burger King for my kids, although the fact that their Slurpee machine or whatever it was, Frosty machine, was always busted was pain in the butt, but I miss that. We saw smartphones eliminate landlines. We watched pets doing stupid tricks on David Letterman. Now we're witnessing banks follow the same path, although probably not the stupid pet tricks. But do any of you remember when he had that suit made of Velcro and he stuck himself to that wall? I'm sorry. That was funny. By 2030, the landscape is unrecognizable. Apple issues Apple dollars. Amazon has Prime Coin. Meta creates Meta Money. Burger King has Burger Bucks. Dunkin' Donuts has Dunkin' Dough. Costco has Costco Cash. Even your Chick-fil-A has Chicken Scratch. Each backed by real dollars, each integrated into their ecosystem, each chipping away at traditional banking. Here's the Generation X dilemma. We're too young to ignore this change. We'll live with it for 30 plus years. But we're also established enough that switching feels kind of risky. Our house, our retirement, our kids' college funds, or our grandkids' college funds, all tied to a dying system. Best Buy bling. Only 31% of Gen Xers say they'd even consider using stablecoins for shopping today. Jimmy John's juice. I'm sorry. Bath and Body bread. I'm sorry. Only 31% of Gen Xers say they'd even consider using stablecoins for shopping today. But by 2030, you won't have a choice. You'll be using Burlington Benjamins or Lowe's Loot. Not if you want your weekly Whopper or your chicken sandwich with Polynesian sauce and waffle fries. You'll be using stablecoins for those. In 5 years, saying I need to go to the bank will be about as antiquated as I need to rewind that VHS tape before I return it back to Blockbuster. Macy's Moolah. Hello, Gen Xers. We're facing a unique challenge. Unlike boomers who can probably ride out their remaining years with traditional banking, we'll need to adapt. Unlike our kids who grew up digital, we'll need to learn. Cole's cabbage. The two-tier monetary system emerging isn't generational by choice. It's generational by necessity. Our children seamlessly navigate digital wallets. Our parents cling to checkbooks. And us, we're the bridge generation, of course. Forced to speak both languages. Is it just me, or does it seem like while we were growing up, we had the stand in line, wait your turn, it'll be your turn in a minute, and then you've waited and you've done everything you're supposed to, and the rewards will be grand. And then the generations after us said, no, we ain't doing that. Y'all stupid. We're not going to work 40 hours a week. We're going to go on YouTube and Instagram and TikTok and become influencers and make billions, and a lot of them have. Are we just stupid? It doesn't really seem right. It seems like we followed the rules and the generations after us just rewrote the rules. The cancel generation or cancel, whatever they're called. I don't know. But, hats off to them. They did it. So, We were the dumb ones for following the rules and doing what we were supposed to. Bojangles bones. By 2030, our money will be instant, global, and programmable. But here's the reality. While 71% of Gen Z is ready for this future, only 40% of us Gen Xers, old people, even understand what's coming. The question is not whether this future is arriving. We know that. If you've watched any TV lately at all, you know that the data proves it's unstoppable. The question is, will we adapt in time or become the last generation to remember when money needed permission to move? You know, when you had to go into a bank and sweat your you-know-what's off to ask for a mortgage loan or a loan to build your house. You know, I asked for a loan to build my house. My dad and I and then two guys that actually knew what they were doing built it. And, worked hard on that. And my poor dad, he worked a full-time job on the railroad. When he wasn't working, he was helping me with my house. He probably thinks I don't remember that or don't appreciate it, but I do very much, Dad. But whenever it came time to refinance from the construction loan to the permanent loan, I almost couldn't afford the house I built. I almost didn't qualify. I couldn't believe it. It was a little bit of a butt-puckering time, let's put it that way. But I guess now money will just move freely. I mean, obviously you'll still have to qualify for certain things, but there'll be people that find loopholes and take advantage of this, and then we'll go back to having regulations, and then we'll ease again, and it's a cycle. Everything's cyclical, as you're probably learning now, no matter how old you are. But right now it looks like we're coming up to another time, which could potentially lead into another 2008, which if you're have any age to you at all, that was a terrible time. But we survived the transition from analog to digital, and everything else, digital, whatever you can name. I guess we're going to have to learn this crap too. I'll see you in the next episode.